Hey, Matt the Mortgage Guy here, recording a quick video giving you a good reason to consider a refinance during a pandemic. Now, before I get into it, if you're watching this on YouTube, you like straightforward mortgage content, consider subscribing. Please smash the like button. It helps the YouTube algorithm. I think this information is important. So the more people I can get it out to, the better. By smashing the like button, you help do that. So on with the show. I talked to a client recently, and this is how a lot of these videos get created, honestly. As I talk to people and they bring up really good information, really good insight into the thought process of the consumer. And I think to myself, that's something I want to share, not only with other clients I talk to on the phone, but make a video about it. Maybe it spreads and helps some other people. So tons and tons and tons of refinance conversations, as you can imagine. In 2020, rates are at historic lows. There's something like $11 trillion in refinanceable, they call it, mortgage, where there's enough benefit to justify a refinance. So that's a lot of people. And if you watch the news, if you talk to people in mortgage real estate, you realize like rates are crazy low. The mortgage business is booming, and rightly so. People are able to save money, improve their financial position, use that extra money to invest for retirement, or use that extra money to send a kid to college, whatever it is, it's helpful. Paying less on your mortgage is helpful, right? So something that came up recently, I think is really important, and hence I'm sharing it, is I had a client tell me, you know what, Matt, I reached out because I wanted to talk to you. I'm still working full time. I'm still getting full pay, but this pandemic kind of reminded me that you never know what's going to happen. You know, I don't know if 6 months from now, my company decides to downsize and I get laid off. I don't know if, you know, my position changes, I get furloughed, I get a 10% pay cut. So before that happens, I want to talk to you. Let's stretch my loan out to 30 years. Let's get me in a payment that's really comfortable, so even in the leanest of times, I can survive. And I thought to myself, what a smart thing to do and to think about. And for those of you who say, well, I would never want to stretch my mortgage out, I would never want to, you know, go from 22 years remaining to 30, or I'm on a 15, I don't want to go back to a 30. Every single loan that we write has no prepayment penalty. So let's say you take a loan that's got 17 years left on it and you do a 30-year fix and you get a sweet interest rate that's even lower than your current one, even if you're on a 15-year. What you can always do, pay an extra $500, $700, $1,000 a month. Turn this new 30 into a 12-year loan. Turn it into a 15 by making those extra payments, but know that you have the option if times get lean, if you get laid off for 6 months, if you get a pay cut of 20% because your organization is going through some changes, you have that safety net. You have that minimum monthly payment that comes with a 30-year loan with a super low interest rate. Now, I understand this isn't for everybody, but I just thought it was worth putting out there to the universe in a global pandemic when some folks are already affected, some folks are not yet affected. They're thinking about their finances. It's something that stresses people out. And I think, like I had the conversation with this gentleman who called me, now's the time when you're still working to think about it. Because you know what happens when you lose your job and you're like, oh my gosh, I'm stuck in this high payment because I got a 15-year mortgage. You're not working, you can't refinance. You're just not eligible. So you're either scraping, scrambling, trying to find money to pull to make this, you know, mortgage payment that you're stuck with, but you're certainly not refinancing. If you do it in advance, then you're in a good spot. And really, there's some circumstances I understand where it makes sense to refinance into a shorter term, 10, 15, 20 years. But for a lot of folks, doing a 30-year, if the rate is pretty close, and trust me, in this super low rate environment it is, give yourself the option. Take your 30-year, and I can show you on a calculator, you can look it up on your own, what exactly it's going to take to pay it off in 10 years, 12 years, 15 years. You still have that option. But in the lean times, you can also default back to that lowest payment, your minimum payment. So for what it's worth, hope that helped. If you're in California, you want to have a conversation about mortgage, I'm happy to help. If you're outside of California, I've got a great network of folks I can refer you to. best means of communicating with me nowadays is Matt, M-A-T-T, at mattthemortgageguy.com. Shoot over an email. My office manager will make sure it gets in front of me, make sure I respond to you, whether that's referring out to a broker in another state or giving you advice, setting up a phone call, whatever it is. Hope I can help. Until next time.